Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it's the second day of the week and it's a holiday truncated week, tomorrow being a holiday. So happy Ganesh Chaturthi to all the viewers in advance and hope all of you have a good one. But yes, tomorrow being a holiday, volumes is something that we will be watching out for and which could be a volatile because it's a monthly expiry week, Thursday being the Nifty monthly expiry and today is the BSE contracts expiry. So traders can square off their positions in these couple of days. But yes, we've had a steady start to the week. But whether or not Nifty can sustain these gains is something that we would watch out for. Because, for instance, the GIFT Nifty trends for today are hinting out at a muted start for the Lal Street. Global handover has been quite muted. US markets ended lower overnight after Friday's big rally. We had two important developments that came in from the US. First being the US President firing Fed Governor Lisa Cook over mortgage fraud allegations. And the second being Trump's tariff threats of 200% on China if they do not export rare earth magnets. So the Asian markets have not taken all of these comments quite well. If you look at the Japanese markets, even the South Korean markets, all of them have been faltering this morning itself. But yes, for our own markets, we have a deadline of additional 25% tariffs looming tomorrow, and US has issued a notice to India about the same itself. So all the exporters, specifically your diamond, gems and jewelry, they have been rushing to push out orders before these tariffs become effective. But yes, the markets have so far discounted these punitive tariffs, hoping that they would come down eventually. So we'll watch out for sectors, how they fare in the upcoming sessions, be it textiles, be it any export-oriented sectors. For instance, your IT did quite well in yesterday's trading session. We'll also be seeing some stocks in focus. For instance, your Irida, they've outlined their growth targets. So we'll be watching out how that stock fares in today's trading session. Then we have public sector banks, which also could be in news today following the divestment news that came up yesterday also. We'll be discussing all of that. We'll be also taking your stock related queries. So keep posting them on our live feed and we'll take them up shortly. But before we delve deeper into the show, let's take a quick check of the top headlines, Sissa. Stocks on Wall Street end trading session lower as investors book profits after Friday's big rally. The Dow slips nearly 350 points. Wall Street futures drag after US President fires Fed Governor Lisa Cook, cites mortgage fraud allegations. Asian markets open lower, tracking Wall Street as investors weighed US President Donald Trump's comments on China. The GIFT Nifty, meanwhile, is indicating a muted start for our own markets. Traders will also keep a close watch on Russia-Ukraine conflict as crude prices ease. Reports have suggested that several sectors seek assurance from the centre on rate cuts not resulting in duty inversion. This comes as industry players point out that execution on ground will not be instantaneous. As the US notifies additional 25% tariffs on India from 12:01 a.m. ET, Prime Minister issues strong message for entrepreneurs and farmers. All right, if you look at yesterday's trading session, we did see that the Nifty has staged quite a smart rebound amidst the Fed dovish signal, where they have signaled that the rate cuts could begin as soon as the September meeting when they meet in the next policy meeting. But yes, the Nifty did end below that 25,000 resistance level, but yes, did saw an uptick of about 98 points itself. Some of the IT heavyweights did quite well in yesterday's trading session. Infosys, TCS, Wipro, all of them ended as the top Nifty gainers. If you look at the other sectors, metals and consumer durables were the other top sectoral movers. However, on the flip side, media FMCG, they saw some notable declines and broader markets that continued to underperform the benchmark indices. But yes, coming to the primary markets, two new IPOs will be opening today. We have Vikran Engineering, which will be opening, and Anlon Healthcare, which will be opening in today's trading session itself. But yes, coming to the flows picture, how they panned out in yesterday's trading session, FI stood as the net sellers, selling stocks which was worth about 2,200 crore rupees in the cash markets, whereas DIIs, they were the net buyers. buying stocks which is worth about 3,200 crore rupees in the cash markets. Then we have the option cues data. Nifty put call ratio climbing to about 0.88 from 0.73 levels. And of course, if you look at the Nifty, F&O ban list, one new stock which has been retained, that includes the likes of RBL Bank and Titagarh Rail, and the stock that has been removed, that is your PG Electroplast. But yes, coming to if your financial freedom is something that is your goal, Super Pro is your superpower. Get all the live trading and investment ideas from SEBI registered experts, pre-identified chart patterns and AI-powered stock alerts on WhatsApp all in one. And right now, with a special financial freedom offer, get the annual plan for just 2,500 rupees, down from 7,500 rupees. Download the Money Control app and subscribe today itself. All right. Now that we are back with markets, if you look at the pre-open rates, that is suggesting a muted start for the Dalal Street. If you look at the Sensex, that is down about 250 points, and Nifty is also down by about 68 points in the pre-open. But on that note, let's quickly get on board with a technical expert of the show. Joining me is Ajit Mishra of Religare Broking. Ajit, good morning. Happy Ganesh Chaturthi in advance to you.
Yeah, good morning, Lovisha, and happy Ganesh Chaturthi to your entire team and all the viewers. And I hope that at least the kind of consolidation that we are seeing in the market, it would finally end on a positive note, and we shall be celebrating the end of the year with a new high.
That's right. That's right. Ajit, yesterday we did see Nifty saw some uptick. Like you mentioned that, there could be some festive cheer on the Lal Street. But however, it fell short of that 25,000 mark. Can we expect upcoming sessions to help Nifty get back on track to this level?
So, Lovisha, the major challenge lies with the banking index because we all know that earlier it was banking and IT put together, which was weighing on the sentiments. Rest of the sectors, in fact, in the rate sensitive defensive space, they all were witnessing rotational buying from the last couple of weeks. But now it's only the banking which is left behind. And without banking, which holds considerable weight in the index, I doubt that we can see any meaningful surge in the market in the near future. And in the interim, I believe that 24,800, that's the make or break area for the index. Until we break this mark, possibility of consolidation followed by again an attempt of further recovery, because from the last 2 weeks we are seeing that Nifty has been gradually inching higher, ending in green. So that is important that Nifty should hold 24,800. At the same time, 54,900 is the key support for the banking index. So these are the two key levels that all the traders should keep a close eye on. Until we break that mark, possibility of rebound is high. But at the same time, the recovery in IT should continue. Then the rotational buying, which we were seeing in the other rate sensitive and defensive counters, that will continue to offer buying opportunities across the sector. So until we see that, stock specific approach is something that you should be focusing on instead of largely waiting for any decisive trend in the index.
Okay, all right. But yes, how do the broader markets look right now, Ajit? Because yesterday they once again underperformed the benchmark indices. Can we expect the consolidation to continue in the upcoming sessions itself?
So, that's the challenge basically, that mid cap, small cap, the quantum of rebound and the overall recovery has not been very strong so far. And in fact, the follow up move is also missing if, we see one day a stock inching higher with decent volumes, but in a couple of days we see the move fizzle out. So this indicates kind of like cautious approach in the mid cap and small cap space. So for a time being now, the focus should be largely on the index heavyweights and the larger mid cap names from across sectors, wherein we are seeing consistency in the trend irrespective of the market consolidation.
Okay. What about the IT stocks, Ajit? Because yesterday they were the quite the outshiners in the market, given that the Fed's dovish signal is on the cards, and some of the brokerages have also remained quite positive on the counter. How do you believe? Can we see that the rally could continue in the upcoming days?
So yes, it's definitely a welcome relief for those who are holding long position in the IT majors specifically, wherein we are seeing noticeable recovery. But we are not completely out of woods yet because we are still trading below the major averages. So 36,750 to 37,800 is the zone basically that where we have multiple resistances in the Nifty IT index. So probably we may see a day or two of further recovery or rebound. But until we break these levels decisively on the Nifty IT index, I doubt that we can sustain those gains. But within the IT space, emphasis from the mid cap IT space is something which is showing noticeable strength. So yes, we do have certain pockets within the IT also wherein we are seeing relatively higher strength. So one can look to go long, in those stocks, but refrain from aggressive longs. In fact, look for swing trades. And the moment you see decent profit in the range of 4 to 5%, it's prudent to book.
Just a couple of seconds before we go to the open, but let's also talk about paper stocks because they saw quite a good rally in yesterday's trading session. JK Paper, West Coast Paper, after the on all of these counters, Ajit, how can we expect these to fare in the upcoming sessions?
So yes, Lovisha, we have had these kinds of move earlier also, but yesterday's move was special, specifically if we talk about JK Papers, volumes were almost 10 times of the average volume. The price action was very strong. So yes, that may result in further recovery towards 440, 460 area. But since we all know that they are cyclical in nature, one should maintain a strict stop losses also in case if you're planning any short-term trades. 385 for JK Paper should be your strict stop, and 440, 460 should be a positional target. Then we have Ruchira Paper, which is also showing strength. In yesterday's trade here also we saw almost 5-6 times of the average volume. The stock is trading at the record highs, means a 52-week high. It's comparatively stronger. So within these themes wherein we are seeing traction every now and then, always prefer the top performing name, and that too with the strict stop losses.
All right. Let's take the first trades that is coming on your screen, how the market is open. Of course, we were expecting a muted start for the markets given how the global handover has given out US markets and Asia Pacific markets. All of them were quite muted in today's trading session. So we can see that Nifty has opened with about 0.2% downtick. 24,900, that is where we are at. Still below that 25,000 levels that we were expecting to sustain. But yes, coming to Sensex, that is also down by about 200 points, 240 points downtick coming in for Sensex as well. Bank Nifty has opened in the red with about 0.2% decline, and majority of the sectoral indices have slipped into the negative territory. If you look at the Nifty IT index like we were talking about yesterday, 0.2% declines coming in from Nifty IT index too. The other two sectors that did well yesterday, that was your Nifty Metal and Consumer Durables. Both of them have opened up in the negative territory. Definitely Nifty Consumer Durables, however, flat to negative bias. That is what it has been exhibiting. On the other hand, if you look at Nifty PSU banks on the back of some divestment news flows, 0.1% declines coming in there too. Nifty small cap and mid cap indices, both the broader end of the markets, have been exhibiting a little bit of a negative to a very muted, slim, muted trend at this point of time. India Wix, however, that has slipped by about 2%. The immediate panic in the markets ahead of the tariff deadline is not quite imminent. That is what is visible in the markets at this point of time. If you look at the top gainers and losers, however, on the Nifty, Titan leading the gains on the Nifty 50 gainers list with about 0.5% gains. This comes after Bernstein has initiated an outperform call on the counter because they believe about 18% revenue growth in the upcoming fiscal years. On the other hand, if you look at Hero MotoCorp, that is also seeing a gain of about 0.4%. Trent, SBI Life Insurance are some of the other gainers on the Nifty 50. However, on the way down, we can see Tata Steel showing a decline of about 0.7%. ICICI Bank, Tata Motors, Hindalco, Dr. Reddy's, they are some of the other notable losers on the Nifty 50. But let's look at one stock, that is your Irida. That is also showing a decline of about 0.3% at this point of time. We did see yesterday that the company has set a revenue target of about 8,200 crore rupees for the financial year 2026 after it did sign a performance-based MOU with the Ministry of New and Renewable Energy outlining some strategic targets for FY26. But yes, today the stock has been exhibiting the negative trend. So far this year also the stock has been underperformer, down by about 33%. Ajit, what is your view on the counter? Can we expect the pressure to continue?
So IRIDA, we are seeing this negative trend continuing for last several months now. And in fact, after retesting its previous swing lows close to around 140 levels, there was an attempt of recovery, but couldn't sustain above the short-term averages. So that clearly shows that bears are completely under control, and it might take more weeks, before we see any meaningful recovery. So it's not only IRIDA. In fact, if you see the other, stocks from the railway counters, there also we are seeing almost a similar trend. So as of now, I feel that, instead of looking for adding to your loss-making position, especially in the railway counters or the defense space, which was buzzing earlier, stick with the names which are trading closer to their record highs or showing relatively higher strength amid this market decline.
Hmm. Okay, all right. Let's take some viewer queries that is dropping on our live feed too. The first query coming in from Debu K. He's asking the view on Dabur, on what does the near-term outlook looks like. Ajit, the entire narrative on the street has been that consumption is expected to take a comeback given the GST rationalization takes place in the next meeting itself, which is there scheduled in September itself. But what is your outlook on Dabur? How does the stock look like in the upcoming sessions?
So Dabur, Lovisha, due to compliance, I can't comment because it's a promoter group company.
Okay, all right, all right. Let's take another stock in focus, however. We have PSU banks, which is in focus given that the Indian government has appointed Goldman Sachs as the sole transaction advisor for a for a stake sale in four PSU banks. That includes the likes of UCO Bank, Central Bank of India, Punjab and Sindh Bank, and Indian Overseas Bank. But yes, today, some slim gains, some sideways movement has been observed in all of these counters. But from a near-term perspective, how do you see these to pan out, Ajit?
So mostly stocks, Lavisha, they are still trading closer to their 52 weeks low. So I feel that within the PSU space, Bank of Baroda, Canara Bank, SBI, the leaders basically is something that you should be focusing on. There could be some news-based recovery or a rebound every now and then that we might see. But when it comes to the sustainability of the move, it's something that we always see that these kinds of news-driven moves usually fizzle out. So avoid any fresh long at the current levels. And in case if you're looking for long trades within the PSU space, then SBI and Bank of Baroda, they are the better candidates.
Okay, all right. Let's take another viewer query then. Now we have Ibni Batuta asking the view on Hyundai Motors, and she's asking what is the medium-term outlook and can the stock touch 3,000 rupees? Right now, the stock is trading about with 2,400, and the stock is down about 2% itself. Today also we saw a good city note coming on the counter where they have given out a buy rating and a target price of 2,400 itself, where they believe that the management has said that the demand outlook for the rural market has been quite positive. However, the urban demand remains quite lackluster as of now. But yes, Hyundai Motors, Ajit, how does the counter look like for the near-term perspective?
So, Lavisha, in line with what we saw in the other auto majors, Hyundai have also participated in the move. It made a new record high of late. The volumes price action was very conducive. But now, after this strong surge, it's normal to see profit taking and consolidation. That is what we are experiencing from last 4 5 trading sessions. So, as of now, yes, you can continue to stay put because the stock has been holding above its short-term averages. And the price action also indicates that 2,300 will continue to be the key support area for the stock. So with that as a closing stop loss, one can definitely stay put. For 3,000 is a target, probably, once we surpass 2,600 mark decisively, then in a month or two, definitely you can see those levels as well.
Okay, all right. Let's take another viewer query. And then we have Raj, who's been asking the view on Kalyan Jewellers for a short-term period. Kalyan Jewellers, if you look at the 1 month charts, it's been quite negative. 14% downtick coming in for the counter, and the stock has been an underperformer this so far this year itself. But can we expect the pressure to continue, or how does the stock look like for the upcoming sessions, Ajit?
Yeah, so we are very close to the immediate support, critical support around 500 levels. So the area from where last time it took support and witnessed a rebound. But the last 4 5 trading sessions indicates a possibility of a breakdown of this level. So it's prudent that one should refrain from any fresh long position and maintain a strict stop at 500 for any existing trades. In case by any chance if we see any rebound or recovery, 525, 530 will be the area where we have multiple resistance. So around that area, one should also liquidate the position and sit on sidelines.
Okay, all right. Let's take another viewer query on that note then. We have Anand Dhruv Bandyopadhyay asking the view on Tata Communications. The stock has been doing quite well from a YTD perspective. However, if you look at from July peaks, the stock is down about itself by about 12% itself. Uh, can we expect this consolidation to continue, Ajit, for Tata Communications?
So Tata Communication, yes, you rightly mentioned that from the beginning of the year, it was largely on the positive tone. But of late, we are seeing that the stock has slipped below the major averages, which is not a good sign on the daily charts. And plus, the volumes are also increasing on the down days. So this indicates a possibility of further profit taking in case if the stock fails to hold above 1550 mark. So for any existing longs, 550, 1550 should be a strict stop loss and use any recovery around 1650, 1680 area to reduce your positions.
Okay, all right. Let's take another viewer query then. Pankaj Mitra has been asking the next 3 months view in Adani Green and Adani Power, and how does the near-term outlook looks like for both of these counters. If you look at from the past 1 month, however, Adani Green has shown a decline of about 1%, 6% itself, and if you look at Adani Power also, however, it has contradicted with about 5% gains. But yes, from a near-term perspective, Ajit, which one of the two would you pick?
So Adani Power definitely hands on because the stock has been maintaining above its major averages. It's a very tight range consolidation that we are seeing in the stock. So possibility of strong recovery once we cross 620 area seems high. So definitely one should continue to look for long positions or accumulation in the stock with 580 as a stop loss and avoid Adani Greens, wherein we have hardly seen any recovery or rebound attempt, and it's currently trading below all the key averages. So possibility of decline towards 900 or maybe lower is high.
Okay, all right. Let's take another viewer query on that note. We have Komal who's been asking on Bharti Airtel whether it's the right time for a fresh entry into the counter for a long-term investment. Of course, the stock has been an outperformer so far this year and past 1 year also. The stock has shown relative strength. Ajit, what do you suggest? Is this the right time to make a fresh entry into the counter?
See, for the long term, because the stock has experienced a strong directional move with marginal consolidation pause every now and then. I feel accumulation is a good strategy. Means you can buy at current levels and keep a room till around 1750, 1800 zone to add more. And for the entire position, 1550 from the long term basis should be your closing stop loss. And upside is open since we are trading closer to the record highs.
Okay, all right. Let's take one stock in focus, that is your Railtel. The stock is not doing well. However, the company did say yesterday that they expect steady growth in its telecom business while its project segment continues to expand faster. The stock has been down 7% in the past 1 month, but what can we expect the near term to be, Ajit, for Railtel?
So Railtel, in comparison to the other railway related stock, is doing better. Means we have had a phase of recovery also every now and then off late, yes, the stock has slipped from its recent highs, currently hovering around the key support area 340 levels. So we may see some consolidation followed by a rebound. So one can stay put with 338 as a stop loss, and once let's say we break this 367, 368 levels decisively, then one can add more. In that case, for 2025 should be your positional targets.
Okay, all right. 425 as a positional target for Railtel. Let's take Muthoot Finance also. The stock is down today with about 0.8%, but the company did say that it has infused about 200 crore rupees into its wholly owned housing finance unit, which is your Muthoot Home Finance, to expand operations into more than 250 cities. The stock, however, has been an outperformer so far this year, up 21%. What can we expect going ahead from here on, Ajit, for the counter?
So the near-term trend looks sideways to me because post the strong gap up, I guess after the numbers, we are seeing marginal profit taking, though the stock is still maintaining above its short-term averages, which shows bullish trend continuing. But once, let's say, we break this 2650 area, then probably we might fill a gap towards 2550 or maybe lower. So as of now, you can stay put, but do maintain a strict stop at 2650. And in case of recovery, 2750, 2800 will be the first area of resistance.
Okay, all right. Let's take another viewer query then. Alex has been asking the view on Aster DM on GST cut on insurance on how the stock could benefit from here on. But yes, Aster DM, so far this year the stock has done quite well, a 15% uptick coming in from here. Ajit, what can we expect? Any optimistic prospects going from here on?
So yes, in fact, majority of the counter from the healthcare space, they have done exceptionally well, and STDM have also participated in the move. But post this move on 3rd of July, we are seeing profit taking or gradual consolidation. So this might continue for a time being now. So if you are okay holding the stock, let's say for 3 to 6 months, you can definitely stay put with 580 as a stop loss. And for fresh buying, one should wait for a decisive cross or close above 430 mark. Then only we will see the fresh momentum.
Okay, all right. Let's take another viewer query on that note. We have Naveen asking the view on Bajaj Finance on how the stock is expected to do in the near term itself. Bajaj Finance, any thoughts on the counter, Rajit?
So it's doing comparatively better. Means though we are seeing volatile swings every now and then, but of late the stock has stabilized. Around the key support area 880, 890 zone. So probably in case if we see the stock continuing above this level, then in the next swing, a close above 920 can trigger the first leg of rebound, which can help the stock to retest its record highs as well. So one can continue to stay put with 880 as a strict stop.
Okay, all right. Let's take another stock in focus. That is your Tata Motors. We did see yesterday that the NCLT Mumbai has sanctioned its composite scheme of arrangement. Basically, the scheme involves Tata Motors, Tata Motors commercial vehicles, and Tata Motors passenger vehicles, along with their respective shareholders. But yes, so the stock has been quite volatile. Today, also, the stock is down by about 0.8%. But any hopes for revival in the upcoming sessions? Tata Motors, what is your view, Ajit?
So, Lovisha, within the auto space, we all know that while majority of the counters, they are trading close to their record highs like M&M, TVS, Eicher. Then we have strong recovery in Bajaj Auto, Hero MotoCo, and others. Tata Motor is still languishing below its long-term averages, so which is not a good sign. Means this underperformance will only subside once we cross 720 mark. In the stock decisively. Otherwise, this kind of sideways tone might continue with 650, 625 being the lower band. So, fresh buying is something that you should refrain in case if you have any existing position. Uh, Better to exit from this stock and switch to TVS or M&M.
Okay, all right. Let's take one other viewer query. We have Dheeraj asking the view on all cargo logistics. So far, they say the stock has seen a notable decline of about 35%. What can you expect the near term to be, Ajit?
In fact, Lavisha, we are seeing fresh breakdown in the stock. So definitely you should exit if you have any existing long, because indications are now in the favor that break below 30 levels can push the stocks towards the new 52-week low, maybe 28 or lower. So yes, the prudent approach is to exit from this stock and avoid any fresh buying until we break 40 levels again.
Okay, all right. Just one last question before we let you go, Ajit. What are your top picks at this hour? We have the deadline looming in front of us itself, but anything that you think that it's worth buying at this point of time?
Yeah, so we are seeing stocks from the pharma basket, defensive basket doing exceptionally well, amid all this challenging environment. And Godrej consumer product, if you see from the FMCG basket, of late after retesting its previous swing lows, has rebounded very swiftly and trading in a very tight range. So possibility of trend resumption seems high. So means 1320, 1340 is something that the stock might test in the near future. So with stop at 1230, one can buy this consumer at current levels. At the same time, since the banking pack, is trading under pressure, and within the banking, we are seeing IndusInd Bank underperforming for quite some time. Possibility of further decline towards, let's say, 720, 725 zone seems high. So here one can look for shorting position with 788 as a stop loss.
Okay, all right. Those are the stocks that we need to keep under radar. But with that, we have to let you go, Ajit. Thank you so much for your time and joining us.
Thank you, Ravish.
All right, let's take a quick check of the markets. We have Sensex, which is down about 500 points. It's extended its sell-off right now. Nifty also down with about 100 points downtick coming in there. 24,800 that has been let gone for the Nifty 50 levels itself. Majority all of the sectoral indices have been trading with a negative bias. Nifty Metal is the top sectoral laggard at this hour. We can see Nifty Pharma also facing some heat with about a percent decline itself. Broad end of the markets have seen a notable decline of a 1% each itself. So yes, all in all, it's a very subdued market at this point of time. We are seeing a BSC contract expiry, so some squaring of positions could be possible in today's trading session itself. India Wix has spiked up with about 4% uptick coming in from there. And if you look at some of the top losers on the Nifty 50, we can see Dr. Reddy's, Tata Steel, ICICI Bank, Shriram Finance are some of the losers at this point of time. But yes, if financial freedom is your goal, Super Pro is your superpower. Get all the live trading and investment ideas from SEBI registered experts, pre-identified chart patterns and AI-powered stock alerts on WhatsApp all in one. And right now, with a special financial freedom offer, get the annual plan for just 2,500 rupees, down for 7,500. Download the Money Control app and subscribe today. All right, coming back to markets, let's move on to our next guest of the show. We have Gaurang Shah, Senior Vice President of Geojit Financial Services, joining us. Gaurang, good morning. Happy Ganesh Chaturthi in advance.
Well, thank you so much for having me on the show. Greetings on account of Ganesh Chaturthi to all the viewers of moneycontrol.com as well as CNBC TV 18, to you and your entire team, and hope that Lord Ganesha brings smile on all your faces and remove all the pains that is there. And wish you well for the season festivities.
Thank you so much, Gaurang. But Gaurang, let's talk about markets once again. Double tariffs, that'll kick in from tomorrow. Do you expect that the markets will continue discounting this?
I think more or less, to be very honest, markets have discounted this to a great extent. I think on the official side, you might see a knee-jerk reaction effective. Tomorrow is off, of course, on account of Ganesh Chaturthi. We get back to trade on Thursday, which is, of course, the last day of the monthly expiry of the F&O segment. So you will see a little bit choppiness, volatility. We are witnessing it this morning itself. So I think get back to the work tables on Thursday morning, F&O expiry, and post that. I think this tariff-related issues will be in the rearview mirror. Depending upon what President Trump has to now tweet or say, I think the world markets or country-specific markets will react. But more of it is already done and dusted. I think we should possibly start looking at domestic triggers, government policies, in fact, in form of the new GST structure in form of GST 2.0. Possibly is that in the first week of November, along with finance minister, the GST council meet is going to take place. We've got an in principle go ahead with the GOM, that is group of ministers. Would be interesting to see the structure of the new GST, which will enable offset much of negativities, tariff related negativities.
That's right. Gaurang, since you mentioned about GST rationalization, that will be the next talk of town. Everyone is betting on consumption to be the next big theme from here on. What is your view on this counter? And of course, any other sectors that you believe that would benefit out of the GST rationalization?
Well, so there are a whole host of sectors which the market is presuming. Of course, we'll have to wait for the white paper to be issued by the government in line with what GST Council has decided. But I think there are a couple of sectors which we feel will have a positive impact. First of all is consumption, as you rightly mentioned. And India is, and India will remain a consumption-driven economy. And that's the fact that we should accept. So you have two parts over there, discretionary and non-discretionary. FMCG companies and consumer durable white good appliances manufacturing companies is likely to get positively impacted. Entry-level two-wheelers and passenger vehicle, depending upon the length and the CC of the four-wheeler, that is passenger vehicle. You have real estate sector, wherein there is possibility of price reduction in case if the slab is reduced over there. We have positivities in terms of cement sector, because cement sector has been requesting the government for an infrastructure sector, so that will get positively impacted. And of course, you have telecom related companies. I'm talking about strong entities. I'm not talking about weak names. So there are a whole host of power sector likely to get, of course, the tariffs, power tariffs are going to come down. So there are a whole host of sectors that we feel will have a positive impact, subject to, of course, we have more clarity on the white paper.
Okay, okay. Gaurang, yesterday we did see that the IT sector emerged as the top performer amidst the US Fed's dovish tone, and now the street is expecting this contra bet to be the next play in the current scenario. But what is your view for all of these IT stocks? Do you believe that the risk-reward play has improved for the next couple of years?
Well, so allow me just 15 seconds for a small disclosure before I go into sector and stock specific. So all recommendations on this show are part of our research team recommendations. Our company Geojit or I, we do not have any personal investments in any of the recommendations given by, nor do we get any financial interest, nor any conflict of interest. But similar recommendations are given to our clients. They might have their investment interest in the recommendations given. Now, coming to the IT, look, it was not very long ago. I think April 2nd, when President Trump announced the tariff, a lot of people wrote an obituary on the IT sector. And then, of course, post first quarter earnings, those views even became much stronger and deeper in terms of negative performance. After announcement by Mr. Powell, Fed chief, in Jackson Hole last week in America, most possibility of a 25 basis cut is the assumption that the street is putting in. Somewhere around mid of September is the likely possibility. We'll have to wait what the quantum and when that rate cut is going to happen, and eventually how does it impact the US economy. But that will possibly translate into positivities for the IT sector in terms of budgetary cuts now not getting into place or discretionary spends not happening, etc. We remain positive that time. We remain positive now. We have coverage on large cap, mid cap, and small cap IT companies from a long term point of view. This with the caveat that you need to have at least 1.5 year time horizon for clarity to emerge and that clarity to have a positive impact on the earnings. But yes, it's a sector that you cannot ignore. So you can start nibbling into some strong names in the IT sector depending upon your risk appetite and time horizon.
Okay, okay. But Gaurang, in the first half of August itself, we did see that the overseas fund managers, they were quite negative on the IT and financial services stocks itself. But now that the Fed dovish signal has been there, do you expect the flows could also make a comeback and maybe, once again re-emerge in these FI favorite stocks?
So that could be one of the reasons, but I'll give more weightage to two more ratings that were put out by S&P from BBB minus to BBB. And I think it was yesterday, if I'm not mistaken, by Fitch, maintaining its BBB minus rating, stable outlook, and not so much of negative impact, by the way, by these two US credit rating agencies. Otherwise, we know the statements that President Trump has made about Indian economy. I don't want to get into that, but yeah, I think these stable outlooks from two credit rating agencies from the US, along with the rate cut scenario evolving possibly in the month of September, outflows could get reduced, first of all. For inflows to come in, I think we will just need to give some time to our FIs, friend FIs. I think they will also be waiting for the new structure of GST quite willingly in terms of taking a more longish call on India. So eventually the flows will come back, but it may need some more time.
Okay, all right. Gaurang, yesterday we also saw that paper stocks did quite well because the government fixed a floor price on packaging imports. How do you see the outlook for the sector from here on?
The sad part about paper is that it performs only on news-based driven stories. Otherwise, for the rest of the year, it goes into hibernation. So that's the sad part. Of course, yesterday was news-based driven trigger that had put a lot of excitement in the paper sector. Unfortunately, we don't have any specific coverage in this particular sector, company specific, that I can talk about. So, you can take your call depending upon what your time horizon is. My sense is that these stocks are seasonal stocks. They are more of a trading idea rather than any fundamental long term.
Okay, okay. But Gaurang, now that the Q1 earnings season is well and done and dusted, do you believe that there's any change to the double-digit earnings projection that the street had been working with earlier for FY26?
So I think we'll need to give it time because we are just coming out of a lot of uncertainty and a lot of headwinds, not on the domestic front, more on the global front. And that's one of the reasons why the government has been proactive. In fact, yesterday we heard the RBI, Honorable RBI Governor, speak about the state of the economy. And he also mentioned that whatever needs to be done in terms of putting the growth trajectory once again upward, all steps would be taken. GST is one of the steps that the government, reform GST 2.0 is one of the initiatives that the government has taken, and the government is also vocal enough that as and when the need arises, policy changes which is existing will be tweaked, new policies will be put in place, and of course all incentives that needs to be given to the industry to face the uncertain times will be put in place. So my sense is that earnings possibly will start looking more stable and stronger from third quarter. I'm talking about overall. In the upcoming second quarter, I think you will see some green shoots on certain sectors related to consumption, domestic themes, which is likely to perform well.
Okay. Anything that you're cautious about now that the earnings season is over also, and some tariff effects could be also taken in effect? Some of the exports driven stocks have definitely not done well, but apart from that, anything that you're keeping sidelines on?
Yeah, so uncertainty in terms of what President Trump is going to tweet or do next. We already know that gems and jewelry textiles are under pressure. The government has also, hived off duty on cotton to cushion this particular textile industry. I think more needs to be done over there. Specialty agrochemicals is something that is on the radar of the President of the United States of America. He's spoken about some couple of other sectors also. Short to medium term, again, it is very difficult to take a preemptive call. But I think policies and investment strategies will depend upon what the global news flow from US is. But my sense is that this would impact for a very short to medium term. Long term, my sense is that there are a lot of opportunities for investment, either domestic driven themes or even themes which are dependent on international news flows, especially US. So maybe it is gems and jewelry. So we are positive on Titan. Again, a disclosure, since I'm speaking about the gems and jewelry sector. Textiles, we are positive on Raymond's. Again, we are disclosure. Our team is positive over there. So I would say that for investors with a little bit of elevated risk appetite, don't ignore these sectors which are right now under the weather because of US policies.
Okay, all right, Gaurang, with that, we have to let you go, but thank you so much for your time and we hope that we connect with you soon.
Thank you. So looking forward. Thank you.
Right, let's take a quick check of the markets. It looks like we have extended the downfall. Sensex is now down with about 600 points. Nifty is also down with about 200 points, cut below that 24,800 odd levels itself. If you look at the sectoral gainers and movers, Nifty FMCG has come up in the green, and Nifty IT index is also showing some slim gain, some reprieve in this subdued market. On the other hand, if you look at majority of the sectors have been oozing out negatively. Nifty Pharma, be it Nifty Realty, Nifty Bank, all of them down with about 1% loss itself. But yes, whether or not we can see some recovery in the markets in the second half is something that we'll be watching out for. But if financial freedom is your goal, Super Pro is your superpower. Get all the live trading and investment ideas from SEBI-registered experts, pre-identified chart patterns and AI-powered stock alerts on WhatsApp all in one. And right now, with a special financial freedom offer, get the annual plan for just 2,500 rupees, down for 7,500. Download the Money Control app and subscribe today itself. But yes, we are back with markets, and it is going to be a subdued market session today. So, given that the global handover has been quite muted, we'll watch out for if there is any recovery in the markets. But given that we have expiry dates coinciding with Tuesday and Thursday being the benchmark expiry day, so some squaring of positions could be watched out from the trader's perspective itself. But yes, with that we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing, and we will be discussing about how the market is developed and what the stocks are in focus. Until then, signing off.